at TradeGateHub.com, and we are sponsored, powered by TradeView Markets. We're fortunate enough to have a great trader with us. Giles Coughlin is with us. Giles, I've interviewed several times on different platforms. Giles, thank you so much for being with us. Late September, before the adults get back from the Hamptons next week, and I'm curious what's on your radar and what you're paying attention to in front of the NFP tomorrow.
Yeah, that's great, Dale. I'm excited, Dale, because I'm finding FX markets are all of a sudden coming alive again. We're seeing these little tradable divergences that are popping up daily at the moment, and I've got two on the platform for today: the US ISM print that's coming up at 3 o'clock, and the NFP print that we've got coming tomorrow. So I thought I'd run through a couple of things that I've got there. Does that sound good starter for 10?
Yeah, you know, I know that the US dollar yen is making new highs for the move. Not a ton of follow through yet, but and I also saw a few of your tweets where you were focused on the symmetrical triangle and the guppy.
Yeah, well, this is very interesting. If we got a miss today in the ISM print, say like below 48.5, and then we got a miss tomorrow for the headline of the NFP sub 75, the narrative would be, oh, hang on, the Fed might have to be a little bit slower hiking interest rates. That should cause 10-year yields to drop. That should allow the yen to strengthen. And the pound has been really pressured. If you look at the guppy, at the guppy, you wouldn't think it's been pressured, would you?
Yeah, I was really amazed at how well the guppy has held up, which really speaks to the strength in US dollar yen. That's what's holding it up, right?
And so if you look at the index of the pound, you see the pound index is just dropping. So that's, you know, shorting the pound now looks a bit stretched if you haven't been already. But a late kind of entry into that
don't be penny wise and pound foolish.
Yeah, do you know what I mean? Exactly. Always what I'm thinking, Dale, is how do I manage risk?
Yeah.
Look, I mean, if the amount of times I've had a beautiful trade fundamentally, and then I've seen it go 600, 700, 800 points the wrong way. So the way I've managed that in my trading is I pick my levels where I'm going for, and I make sure they make absolute technical sense, like this with the symmetrical triangle. Technically, that's rock solid. If that breaks lower, you can easily put your stop at 164, 165, and be absolutely convinced that if my stop gets taken out, it's because something was wrong.
Yeah. Right.
So that's the level of conviction that helps me to hold a trade. And maybe we can go through that silver trade that we spoke about last time.
I want to talk to you about this first before you go. Would you measure the potential of this triangle from the lows that you had in May to the highs that you had in June, and then tack that on to a breakdown?
Yeah, so what I do is, first of all, I'd look at what is your standard technical interpretation. So your standard technical interpretation is you always take the height of the pattern. So that would be 168 down to about 156.
12.
So that's a good, move lower. And I just sort of put in, I'd measure that. So let me just get my measuring tool.
And the CCA is what designation after your name? It's like CMT here in the US, or?
It's Chief Currency Analyst, but I am taking the CMT course coincidentally.
Okay. You're in the UK, Jess?
Yeah, I'm in the UK, Dale.
Okay, all right.
So
how's your electricity bill this month?
Oh,
are they subsidizing it? The feds?
There is, because we have Boris Johnson step back and we haven't got a new Conservative Prime Minister in situ, we haven't had any more support released, but that will come probably Monday morning. But at the moment, there's £400, And the average UK energy bill is now around £3,300 a year.
A year.
And a year, and that's gone up from about £1,200. So it's nearly triple what it
You're
was.
pretty cheap, because I have an electric bill already here in the U.S. but I live in a warmer place during the summer, run air conditioning. But it's over 200 a month, so
Wow.
3,000 doesn't sound outrageous to me. But I've seen people show these electricity price charts that are parabolic to the upside. So
and it's just set to get worse. That's the problem. We have this new energy price cap that used to be every sort of 6 months. They changed it to be every 3 months in the hope that it would allow the energy prices to come down quicker. All it's done is allow them to rise faster.
Yeah.
So it's a problem.
Okay.
So going back to the guppy, what I'd be looking for is I'd be looking for this bottom of the symmetrical triangle line to break on a weak ISM print today, but then I'd also want to see a weak NFP print tomorrow. I'd need the two together to give me the conviction that yields are going to come down a little bit. And then my first target would very simply be this nice, simple support level down about 157.50. Because although you might technically see a whole run down, usually I just like to take profit at the major support and resistance levels. And that's such a major level, you wouldn't be surprised to see some kind of consolidation, maybe a little bit of retracement back up to test the trend line before coming down. So I just find it easier to take those immediate drops down into key levels.
Okay.
So that's what I've been looking for the pound yen. It's almost identical setup with the euro yen as well.
Okay. Euro's been a little bit stronger as expressed by euro pound, but yeah, the cable's definitely been the weak sister between the two.
Yes, but
it looks more like a yen chart, both of them, rather than a euro yen and pound yen. They both look kind of similar here.
But the better thing about the euro is we've seen a little bit of a retracement in the euro basket.
Yeah.
So that means it's a little bit more suitable for taking fresh shorts in the pair. So I think the euro yen also has some attraction to it. And if you notice on the chart, you see that euro yen has moved up to testing that upper trend line from June and July. Now I know, Dale, the purist technician would say, Giles, that is not a trend line. That's only a potential trend line because you've got two touches. But what I found through experience is when you have those major swing points, like here and here, and that's the extreme of price, there's no other price the other side of it, they're rock solid. Okay. So in other words, if we got a miss in the ISM print today, lower than 48.5, if we got a miss in the NFP tomorrow, sub 75,000, I expect yields to drop, the dollar to drop, and I expect yen to strengthen, and I expect this trend line, this to be a false break of this trend line. And that would give me a nice clear run down to 135. I'd probably do the 200 exponential moving average as your target, maybe make it 136, just sitting above those 200 exponential moving average there.
But in your style, are you all in, all out, or are you piece in and piece out?
I vary it depending on my conviction level, and I use piecing in with leverage.
Okay.
But that would make a lot of sense, and you can see the way that the euro has expressed some strength here against the weakness in the yen. So if we get a flip in the yen strength, this would be ideal.
Okay. I read that positioning in euro, it hasn't been this extreme since February of 2020 of net shorts in the euro. And right around that time period, within a month, it was a major trading low for, significant rally, 10, 15 cents. Recently, I know we're down today, they haven't really been able to break the euro and take out 99. Do you have a view on whether or not this is possibly a bottom in the euro, top in the dollar, or should we be looking for 97 in the euro and 110 in the Dixie?
you know, Dale, with the amount, when you look at the amount of variables we've got in the market at the moment, we've got the Fed on a tightening cycle.
Yeah.
We've got Europe having stagflation. We've got
Yeah.
slowing Chinese growth. We've got
Why
a
would you
Russian.
buy? Why would you buy Europe at all? Right?
Yeah, you've
There's
got a
not one
Russian.
reason, huh?
Yeah, you've got a Russian-Ukraine crisis.
Right.
You put that all together. For me, trying to pick a medium-term view through that, it just doesn't make any sense, Dale. You know, it's hard enough to look at two variables, let alone, you know, 12 dozen variables, all of which have enough to significantly move markets. So what I'm focusing on at the moment is those short-term deviations where I've got conviction for about 6 hours. That's, you see what I mean? That's what I'm looking at.
It's smart because you really have to be tactical. It's there really aren't many trends. There might be continuation of trends, but they're very advanced. These trends are not embryonic at all. They've been going on for all year. So I was just wondering if there was anything in your work that showed something like that for a potential turn. What are we looking at here?
Well, I'm looking at the Dow here because I just wanted to use this as an illustration to how I'm managing markets at the moment. And this was like my community, I was sharing with them when like the Dow was rising after the last FOMC minutes from Powell, when it was perceived to be a dovish shift.
Yeah.
Now, we know it wasn't a dovish shift, but it was perceived to be. That gave stocks a little bit of a run higher. We weren't convinced that this was a new bull market rally. And what I was saying to the team, I said, look, this is probably a bear market rally, but if you're going to express a medium-term view on this, make sure you're doing it behind rock solid technicals. And remember I said, when you have a trend line on that euro yen, when it respects 2 points, this is another technical example in the Dow. You've got 0.1, 0.2. I said that's a probable trend line. We then had a shark fin or
just like the euro yen.
Just like the euro yen. Then we had a shark fin or a coiling inside bar or a symmetrical triangle pattern form on the Dow. And if you remember, around the middle of August, that's when expectations started to mount. You know, Powell's going to be hawkish at Jackson Hole. Powell's going to reaffirm the fight against inflation. And what I said, and I did this live within my team, so this isn't hindsight trading, Dale, although you know what I mean. You have to give me the benefit of doubt there. I shorted this symmetrical triangle. I said, look, stops are nice and easy. They're just the other side of the pattern, just at that 3,400. And you can take a run down. Now, I didn't get all of this. I took a run down to about 3,300. But and then as I came to the Jackson Hole, because I didn't know what Powell was going to say, I took profit because I didn't know maybe he was going to take a more dovish pivot. Maybe he was going to stress signs of slowing growth. And we've had a whole mix of US economic data coming in that I didn't feel it was easy to tell what way Powell was going to go. And then obviously he affirmed that more hawkish stance.
So I'm interested in your self-talk because I think a lot of traders do that. They make the tough money.
Yeah.
And then they're out and then the windfalls occur. What do you say to yourself?
Oh, just rinse and repeat. Just do the same thing again. So
I mean, do you say to yourself, maybe I should have held a piece? I mean, do you second guess yourself when things like this happen or not?
Yeah, of course, Dale.
Do you go, oh, shoot, God, look how much more of this trade I could have had if I had been, crazy enough to take risk on what Powell was going to say? And, it doesn't only happen on major events. I'm just talking about, it happens to me a lot. I make the tough money. I get out of a trade, and then all of a sudden it's windfalls. And maybe 2 or 3 days later, if I just sat, the only way I can move on is to say next. All right. It's just another trade. But for much of my career, I would commiserate about it. What's your self-talk when you miss something like this?
I think I'm probably just my personality type is probably quite well suited to move on to the next thing. I am more of a glass half full. So I'm more like, wow, this is great. There's differentials are happening between central banks. Yeah. Every day, economic data points have the potential to give me an intraday trading opportunity. Okay. So like today, for instance, I've initiated a CAD Swiss franc.
So you're more of a day trader, maybe overnight trade style. That's your style anyway.
Yeah. So I'm more, because what I'm finding is I find the intraday stuff a little bit easier than picking those massive
inflection
macro
point
shifts.
Yeah.
And I find it hard to maybe hold a trade for 2-3 months.
Yeah.
And I just find it much easier, like within the day, okay, I know what the sentiment's going to be for the next 6 hours.
Yeah.
And even
know
with this
thyself.
Yeah.
You found a trading style that suits your personality.
Yeah.
Which is something that Jack Schwager, I asked him the most important advice you could give to traders, and he said, find a style that suits your personality. So you know what your temperament is, and that's the kind of trading you do.
Yeah, and I've always been one of those guys. I'm quick, I move around the house quick. I do things quick. You know what I mean? Everything is just quick.
So, how are you with a vacuum?
Yeah, you know what I mean? It's like vacuum brutal. It's brutal. Watch out, cats. Right. Watch out, family. Even my wife says to me, you're like your voice is so loud. It's like it's a physical sensation speaking with you, and that's just it's just me. I can't help it. So
I'd like a pint of your blood for a transfusion after the week.
We're all different. It's 6:45 a.m. and I'm getting up. My wife says, "What are you doing?" I said, "Why don't you have a lie-in?" I said, "I have had a lie-in." You know what I mean? It's 6:45. I've had my lie-in. I can't stay here anymore.
Yeah. Okay.
Yeah. It's just we're all different temperament-wise.
Yeah.
So even with this Dow one, I took another short on Friday.
Okay.
And I closed out on Monday.
Okay.
But do you remember it was a pig to trade? Do you remember that? Or last Friday, Jackson Hole? Because he didn't come out and say, look, we're definitely going to be hiking 75 basis points in September. That would have been the shoe-in for an obvious stock short and an obvious dollar yen long. He was much more vague. And it was really the market sentiment that convinced me that this is being perceived hawkish as the day went on. So I joined Dow selling quite late in the day on Friday because it wasn't clear cut.
That's a pro. I have a hard time chasing things either way once there's a pretty big move. And that was a huge candle. To get short down there later in the day takes, it was the right thing to do. It's just that I have a hard time chasing anything. So I probably would have just let that go. Nice trading. So, now that, and I should have been aware of it because we've talked, I don't know how many times, but last time we talked, you were very constructive in silver and gold, that we had made a nice bottom and, buy a pullback in silver, maybe to, that was before it got to 1870. I think maybe 1970 was going to be a place that you would look at it. What got you out of the trade?
Yeah, that is a real. Now let me show you something, Dale, here, and I'll show you my thinking process because I'm really glad we spoke about this. Now I run a Telegram channel, and I'll show you what I said to that Telegram channel exactly when we had the.
You do singing telegrams too?
Here we go. This is what I said. Now, this was 19th of August. So you just see here that it's not where the group is. That's not the relevance. The relevance is the message. So 19th of August, that's me, Dale. I said, there is now silver pending order cancelled. There is now a strong likelihood that Jerome Powell will need to take a more hawkish stance at the Jackson Hole Symposium next week. This is positive for yields, the US dollar, but negative for silver and gold. So silver trade pending order is cancelled.
Good no trade.
It's good no trade. And on top of it, when I opened a gold and a silver after the July FOMC meeting. So do you remember when I last spoke to you, I was long silver and gold.
Yes.
Now, if you notice, this was like a seasonal webinar that I do for a group, and I combine seasonals, fundamentals, technicals. And there I opened at 1739, closed at 1777. And if you look at for a 2.18% trade return, but if you look what I said, it's strong gold purchases for Asian wedding season and Christmas stock, which is why we get summer strength in the silver and gold. I said, Fed FOMC meeting perceived to be more dovish, but closed 5th of August after the NFP print came in very high, showing the Fed may be able to be more aggressive. So for me, what got me out of gold and silver, so what made me close my longs was the strong NFP. And then what made me close my pending order on a retracement in silver was the fact that I thought, Powell's going to be more hawkish. So this doesn't suit silver longs or gold longs. And then, as I shared with you at the time, this is my go-to interpretation for gold and silver, which has been faultless for me.
The gold silver ratio? Or
no? I'll show you that in a minute, but this is because I still think there's a great opportunity in gold and silver. I do. I think it's fantastic, but it's timing. So this is the interplay between real yields, the dollar, and gold. So you can see I'm using tips here as a proxy for real yields and the dollar index in the purple. And you can see when the dollar and the real yields are falling, that supports gold prices higher. So at the moment, we've got real yields rising and the dollar rising, and that's pressurizing gold. So that's not a surprise for me to see weakness in gold. And I was speaking to Bloomberg Asherak just before our meeting now, and they said to me, Giles, what's the level where you're expecting gold to see a turnaround? I said, no, it's not a question of what level I'm expecting gold to turn around. It's a question of what fundamental change do we need to see for gold to turn around. And what we need to see is the Fed slowing down their aggressive rate hikes. And if they all of a sudden make more of a pivot, then we can see the dollar come off the highs, we'll see real yields move lower, and that will send gold and silver higher.
So a 50% interest rate increase in September instead of 75 might do it?
I think it will depend on the communication. So at the moment, with most central banks, the level of the interest rate hike is not as important as the communication with it. So look at the Bank of Canada at their last meeting. They hiked by 100 basis points, surprise move, shock markets, and then the CAD sold off because the market thought, oh, you're just getting the hikes done early, out the way. You're not raising the terminal rate. So weirdly, interest rates kind of are having less importance than they normally would in typical situations. So I think if the Fed say 50 basis points and, something to indicate that we're concerned about slowing growth, maybe the last jobs numbers, if they weren't so strong, or we're starting to see impact on the jobs market, so we're thinking carefully, anything like that, then you'd expect yields to drop lower and you'd expect gold and silver to surge. And I favor silver long still, Dale, because look at the gold silver ratio.
Yeah, 96.
Look, it's almost worth buying silver just anyway. I'm nearly at that point, and I think
we're above the 50% level retracement from that high in 2020.
Yeah, and for your
we're
viewers,
a little bit above halfway back.
For your viewers that haven't seen the gold price ratio, all it does, it tells you the price of silver relative to gold. And when the ratio with the candlestick chart is high, it just means that silver is low. I've just got to plug in my...
You could even simplify it like this. If I laid a 1 ounce gold coin on the table today, I get 95 ounces of silver. Okay. And in the old days, the mean was about 40 on this gold silver ratio for many years before I had gray hair. 40.
Yeah.
Okay. All right. So you like buying silver just anyway because of this is compared to gold. You feel there's more value in silver.
And
okay,
you know, you would expect gold and silver to be the inflation hedge, so you'd expect gold and silver to gain for sure, but it's just the timing. So what I'm going to do is I'm going to wait for that dovish tilt, and then when I get that dovish tilt, I'll use a bit of leverage and I'll go long gold and silver, and that's my plan, because I think it's a great opportunity. I saw now in March 2020. Look at the gold silver price ratio. It was 125, nearly 130. And I had a hedge fund manager who I've been speaking to for my Forex Live days for years. He just said, "You've got to see this. This is a fantastic opportunity." He was like, you know, "I'm buying as much silver as I can." And I started looking into it. And I thought, yeah, that's a fantastic opportunity. But I only took a fraction of the move.
Yeah,
you know,
that was a huge
I only took a
one.
fraction of the move. So yeah, I am still.
Well,
I'm
that
still
was
smarting,
COVID.
but at least I can smile about it, you know?
Yeah, that was COVID. So,
Yeah, and it was just, look, incredible how cheap silver got relative to gold. The beauty of it is that I've got another chance to redeem myself, right? So if this keeps moving higher, gosh, I mean, the way I handle this now, Dale, is really simple. So let me show you how I handle it. And I can show you how I can get into this with absolutely minimal risk. There's some risk, and you might walk away with a bloodied lip, but you're not going to be knocked out. So I would just simply use that trend line there, Dale.
Okay. Yeah, another one of your two hit trend lines.
Like, it's as simple as anything. Do you know what I mean?
Yeah.
Because if that does break on a fundamental shift, the chances of prices coming back below that would be very, very, very low.
Yeah.
And also, relatively speaking, look, I can take about $1.50 risk, maybe pop it under 17. So, okay, if I'm wrong, I'm wrong, and I can accept that. But I'm not in the situation. I remember, like, there's a guy on Twitter I follow, obviously a very experienced investor, got a huge fund, and he's been bullish precious metals for a few years based on the inflation story. And I was looking at some of the drawdowns he's experiencing in his account, and I'm just thinking, why? Why do that to your fund when you could have said, okay, I've got this bullish story, and I'll go with the break of a major trend line. Like, you could use a weekly trend line or something. Do you know what I mean? You could do it really, really big, and you could have said, okay, I'll go with this week of this break of this weekly trend line. And if we stay above, that keeps my bullish story alive. If I get back below, I'll stop and think again.
You want the explanation of why?
Yeah, I do.
He does it? Okay. Because FOMO works in more than one way. The fear of missing out pushes people into the market. And then when people are underwater on positions, they also have FOMO because they believe if they get out, they may not be able to recommit, especially if it was a huge hit, that they wouldn't have the psychology to be able to re-enter the trade. So that's FOMO too, fear of missing out. So they stay with trades longer, being afraid that they won't know how to just take a hit and then get back into a trade. You really have to be a pro to take hits in the market. I was even talking about this earlier. You know how people say, well, you know what? That gold market burned me, or that guppy burned me. I'm never going to trade the guppy or the gold again. You know what? It's not, an instrument can't burn you. You were wrong. Your trade plan was wrong. Your timing was wrong. And until traders own and can say, you know what? I was wrong, they're not going to grow. And you can't blame an instrument which doesn't care about you. They're not trying to, attack you and make you a victim. You were wrong. It wasn't the gold. The gold was right. The guppy was right. You were wrong.
Dale, that's exactly right. And let me give you an example just to underscore what you're saying. The New Zealand dollar yen, right? If you remember, before the RBNZ meeting at the end of last year, they turned the most hawkish central bank out of anyone. So it was a clear New Zealand dollar yen buy, 100%. Bank of Japan, low interest rates, RBNZ, terminal rate, even then, going back, it was like 3+%. Mm-hmm. Then look how far the pair fell from like 81 down to 76. Now, you could have been long there, and you could have been down 700 points. And you still couldn't say you were wrong down there. Do you know what I mean?
Yeah. Yeah.
But look what you could have said. Look, I'll just remember that those trend line I said? You could have said, look, I'll just wait for this trend line to break. And I'll put And then look, you've got all the move, no stress.
Yeah.
So I think that's
weird. What a weird move. They were all solid candles.
It was so strange.
What a weird move. I mean, usually on, when it's going up, they'd be hollow bodies, right?
Yeah, I mean,
so I could see missing a move like that.
But it is the biggest weakness of macro FX trading. That sometimes the price, the further price goes against you, the better value the trade, the cheaper it is.
Yeah. Yeah. So fundamental traders, again, a Schwager quote, while he says technicians are better at managing risks because they can't rationalize it being a better buy or a better sell fundamentally.
So what I've done is I've merged the two.
Okay.
And for me, I have this. This will sound a bit zen, but it's almost like I don't see the divergence between the two, because really all price is an expression of the market sentiment, the market fundamentals at that precise moment in time. So I'm always just trying to manage my risk, because as soon as you're using leverage, you leave yourself vulnerable to a move going beyond what will make you feel comfortable. And then when you feel uncomfortable, you're not rational anymore. So we have to deal with that fact. And I think the only way I can deal with it is by learning to take those hits and accepting that as part of the process. You can't be right every time, and you're not trying to be right every time. Okay. You try to be well positioned and logical each time.
It's all probabilities. So the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. And Giles, it was great having you here at TradeGate Hub. Do you want to wrap it with one more look?
Yeah, there was just this CAD Swiss franc trade I entered today.
Yeah.
We had high inflation out of Canada. Out of Switzerland this morning, 7:30 UK time. I'm expecting the oil is weak, so that should weaken the CAD. We also have the Bank of Canada meeting next week. It's unlikely they're going to take a more hawkish tilt. So a sell at market makes sense with stops just above the R1, looking for a potential move down to that S2. That's an intraday trade that I've got on today.
Okay. All right. So you have it on tape now, so you could brag about it when it works.
Yeah, or commiserate. It's a lower conviction one, but there we go.
Anyway, Giles is a pro. If people want to follow you, best way to get in touch would be what?
So I can follow me at Twitter at Giles Coughlin CCA, or go along to my HYCM blog, blog.hycmlab.com. And I also have a website as well, gilescoughlinfx.com.
Giles, my trading warrior brother, thank you. It's great talking to you again.
Yeah, it's lovely to talk to you as well. Thank you for sharing all the benefit of your wisdom over the years. It's so nice to be able to talk shop properly.
And, I root for you.
Yeah, I know you do, Dale.
Yeah, me in your corner. So I want to see here. I'll teach you a trading technique you've probably never seen before.
Yeah.
So you want this market to drop, right?
Yeah.
So you put your cursor over the candle here, like this, and then you go 1, 2, 3, down. 1, 2, 3, down. And if that doesn't work, I've tried magnets. So, anyway, that's my
That's
cursor
it's the
technique.
solution I've been looking for, Dale. Thank you. Thank you very much.
I usually charge $9,000
Oh,
for the
I
cursor
bet you do. It's
technique.
worth every penny.
Anyway, great laughing with you too, buddy.
Yeah,
Thanks.
you too, Dale.
Thanks for showing up and sharing your charts and your style. Appreciate it.
Thanks for having me, Dale.
All
Be in
right, Giles
touch.
Coughlin, everybody. Hope you enjoyed it. Look for him on Twitter at Giles Coughlin. What is it? CCA?
Yeah.
Okay. All right, buddy. Unbutton that top button and loosen the tie, and I'll be seeing you down the road.